So I've really been enjoying this volatility, especially within the past 2 to 3 weeks in the market, specifically the S&P 500. And where we left off on Sunday, the last video we did a couple days ago, I was referencing a lot of accumulation in the dark pools, specifically in the 425s. So as you can see here on this chart, we did close right around 425. It was 424.66 on the close today. So those hefty dark pool prints are just a tad above where the current close was, and we'll definitely need to reclaim that level where the dark pool prints were in order to confirm a bottom of this correction. Now, I'm personally in the camp of believing that the correction lows are either here or we're very close to them, whether it is a slightly lower low that still needs to be made within the next 5 or so sessions, or we're just about ready to continue up from here. I believe we are very close to a bottom. The only thing left basically that would need to confirm it would be a break back above this trend line right here, as well as those dark pool prints that I just referenced in the high 425s. Now this trend line starts all the way at the October 13th low from 2022. We tested this, or this trend line was established on March 13th because that's the low that we had during the SVB/banking crisis, and we've continued all the way up until now. This is the first major retest of this trend line, and this is a major upwards trend line. This needs to hold in order for the uptrend to remain intact. So there can be price discovery for a bit under, especially because that's a common tactic of market makers to stop a lot of people out. They'd see that, hey, we broke below this trend line, and a lot of people would liquidate the potential long exposure and potentially go into short positions under here, which you can see today. Once we did close on the day, it was just a tad below the trend line. So we're back right about where this trend line is. And something that's very interesting about today, if you do follow the Twitter account for Cheddar Flow, you can see there was a lot of put selling, and these were very unusual orders. So some of these puts, and by the way, I am going to release a video tomorrow on put selling. So if you kind of are not sure how it works or how to identify very unusual orders, you can see that video tomorrow when it's posted after hours. So you can look for that. But basically, today we saw a ton of put selling over here on Tesla, for example, for the 10/13 expiration. We saw $2 million worth of put selling. This was sold to open because the volume is over the open interest. And again, I will go a little bit more in depth tomorrow on this. But generally, whenever you see put selling like this, especially when it's being sold to open, that is a bullish sign. They believe that, at least in this case, the short-term low was in for Tesla, and it did end up continuing a lot to the upside today. And it wasn't just Tesla that had this. If you scroll down, we can see QQQ also was a culprit of a lot of put selling, 1.5 million in premium, also for the 10/13 expiration for the 353 strike. These types of orders are only common when volatility is high, because the IV, aka implied volatility, is heightened due to the excess stress on the markets at the moment. Then you can have heightened premium, and in this case, whales like to sell that heightened premium because they can collect the premium by the expiration. So in this case, it would be $275 for every contract that they could collect if this expires, of course, worthless. And $275 may not seem like a lot, but when you're dealing with $1.5 million worth of contracts, that certainly adds up. So we did see it on QQQ, we saw it on Tesla, like I just showed you, and then also the last one, as we scroll down, we saw it on SPY as well. So a super unusual amount of call selling. All these were within October expirations. This is a weekly expiration, 10/6, for the 420 put. This one was 1.3 million in premium, and this was near the low of day, or right around that range, set 422.47. I remember we closed near 425 at the end of the day. So this whale was predicting that we either would chop into the end of the week or have upside into the end of the week. And in this case, we did have upside at least into the end of today. And assuming that they hold, they do want to see price close over 420 so they can collect the premium on this. So again, a lot of that call selling. We saw it on SPX as well, but I won't bore you by looking at any more of that. What I do want to show you though is a trade setup that I took today, and this is just a review of a trade setup. This is not a trade setup that I provided here on YouTube or anything, so treat this more as educational content. But what I saw here was, one, we saw a lot of the put selling earlier today, specifically during this dip here. I'm on the 15-minute chart for the S&P 500. We saw this rejection off of my blue trend line right here. This is the one, if you go onto the hourly chart, you can see this one goes all the way up to a pivot high from back over here. This is a high that we made at the end of July, and then you can see it goes down to a low that we made in the middle of August. And then as of recently, at least from today, if I go back to the 15-minute chart, you can see we did retest that over here, and this acted as a clean rejection spot. Not surprised at all that it rejected off the initial retest because it is a key trend line. of course, is going to act as a resistance initially. In this case, we did pull back from it. The key thing from the pullback is a couple of things, actually. One, we're starting to see a lot of put selling on the way down, like I just showed you in the flow. That was very unusual. It's not common to see millions upon millions of premium for SPY, QQQ, Tesla put sells. Two, this was a retest of the previous intraday breakout range. 4,240 was the previous intraday breakout range. We broke out earlier in the session over here at 11:15 a.m. This was the breakout candle, followed by a pullback afterwards. There were buyers present, as you can see on this 15-minute candle over here. You can see we did pick up from that, and then the next candle was a straight shot up to this trend line. Then it consolidated and had that rejection. So this is also, again, too, a retest of the previous breakout. So this area basically acts as the bull's last chance to bounce it, because otherwise, if it fell back below the previous breakout level, we'd likely see a lot of downside under that. And then, of course, all the colors you see on here, this is a Fibonacci, so very simple Fibonacci retracement. We are within the golden pocket here. That's that green, so between the 0.382 as well as the 0.618. So this green range right here is the golden pocket, and this provides a nice supportive structure for a higher probability bounce. So all this converged together. I really liked it, and also the risk reward was great, because if we had, let's say, a 15-minute to even an hourly close below the range, roughly around 4,230, then I can just cut that, and that would only be about 10 to 15 point risk on the S&P 500. So I took a position, 4,237 intraday. Price consolidated for about another 30 minutes, and then it was a straight shot up. And my first target here was just one of the retest again of this blue trend line, where I trimmed 1/3 of my position, and then after that we had the clean breakout to the upside. So we had a nice strong close on the day. Would not be surprised to see this trend line get retested soon. Again, remember, we're in a very volatile environment right now, so even though the close today, especially on the daily, looks very strong, you can still have a lot of chop in between this range. It doesn't have to be straightforward to the upside, and that's why I just trimmed 1/3 over here at this trend line retest, because I know that this is a very volatile environment, and therefore I do want to secure profits on the way up, which is always a good practice, but especially right now, end of September, early October, typically the most volatile time of the year. And as you can see with the recent price action, it's just been up and down a lot recently. So just thought I'd share why I took this trade setup with you guys. And then that also brings me to the next part of this video, where I want to go over some things that I'm looking for heading into the end of this week, and especially next week, because this is a very crucial time period, like I said in the last video. So one, like I said earlier, I do want to see around at least 426 get reclaimed. That would knock out not only this trend line over here that I was showing you earlier in the video, but also all of those large dark pool prints. If I show you really quick over here in the dark pool levels feature, so if we filter to last week over here on the dark pool levels feature, we can look at some of those prints and the specific levels that they were at. Again, the ones that I'm interested in are the 425. So if you scroll down for a bit here, we can get to the 425s because it is in chronological order. You can see here the 2.9 billion print, 2.7, 2.9, and 2.7. This is a lot of premium. I'm very confident that this is a form of accumulation, especially because of how much we've corrected so far. By the way, that doesn't mean we just have to bounce straight off of it, especially when it did print last week. I mentioned that in last week's video as well. Remember, these are shares. This is not options. These are large institutions that have access to dark pool exchanges buying a lot of shares. In this case, again, we don't know the exact intent of dark pools, but I'm fairly confident that this is a form of buying. So they can wait on shares if price wanted to go to, let's say, 417 in the next week. They can wait on these shares for an eventual bounce. The price does not have to bounce straight off of it when they are adding. This is a form of accumulation after a major drawdown, so you have to give it some leeway in terms of price and some leeway in terms of time before an eventual uptrend that I believe will emerge into end of year. So around this range, roughly 425.78 to 425.94 is area that we want to see break in order for it to confirm more upside and potentially confirm lows. If we close the weekly above, let's say, roughly 426 on this week, there's a very high likelihood that the lows are in for the current correction. So if that were to be the case, that would certainly be good to see. Otherwise, we still are in this volatile zone. Like I just said, we could even see 417 before continuing to the the upside. We did test the 200-day moving average today on the future session, so that is a bullish retest and bounce. However, again, we still have yet to confirm lows at the moment. Once lows are confirmed, we will be looking at a large rally into end of year, in my opinion. But of course, the question is, have we bottomed as of Tuesday this week, or will it happen within the next week or so around this range? I personally believe we are very close, if not already there, for a bottom of this correction. So just wanted to share my thoughts on that. And lastly, continue to watch volatility. I know I talked about the S&P 500 mainly today, but the VIX is very important right now, just because we did sell off from around 20, but what's critical is, look at this, on the daily chart as well as the hourly chart, you can see there is a cup and handle pattern structure here, and we did still close above both my 1760 and also yellow trend line today, despite the negative 6% sell-off. So as long as we remain above this, especially going into the end of the week, if we had a weekly close above, that is bullish going into next week for the VIX, which of course would be bearish for the general market. So you do want to monitor volatility, especially going into next week with a bullish structure on it right now. And as long as we remain above, we can see back and forth price action persist. Again, like I said earlier, we had a strong daily close today, but you can see major gap downs when the VIX is this high up, and that can change and shake up a lot of things. So you just have to be careful during these time periods. And again, like I said earlier, I personally believe we are getting close to the exact low time period as well as price for this correction. So keep that in mind, or at least in the back of your mind as well, as we kind of navigate the current market environment. And other than that, I will see you guys in the next video, which will be tomorrow for that put selling video.